All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Ben Allen. Hope everybody is doing well today, this fine Wednesday. So, as always, let's turn off all distractions, grab a pen and paper, let's take lots of notes, and let's make sure that we participate and engage, all right? So, we'll dive into the fundamentals. Got some interesting conversation to have this morning. Then we'll take a look at the charts and take a look at any pairs that you guys have. Take a look at. We'll start there first, and then we'll dive into the few that I want to discuss. So, yeah. So, real quick, just drop me one in the chat if you can hear me, okay? And we will get this thing rocking.
Chat disabled
first. Thank you. What about now? But you can hear me, so I appreciate your joy. All right, so let's slide over to trading economics. Benny drops notes in the chat in the Discord for us this morning. As a matter of fact, why don't we do that? We see off top, bond sell-off accelerates. Yield on the U.S. 10-year Treasury note rose above 4.86%. Yesterday was 4.75, hitting new highs since July 2007. Let's check out the importance here. And we'll just go through some of the notes that Benny broke down for us in the Discord. So let's slide over there. All right, so we got U.S. 10-year, right? Surges and impact on the dollar. Keynotes. Reaches 4.86, highest in 2007. U.S. Treasury yield is nearing 5% mark, a 16-year high. Hawkish sentiments from Federal Reserve signaled potential prolonged high interest rates. Positive economic indicators, like the JOLTS report and ISM manufacturing PMI, showcase U.S. economic strength. European and Asian markets also witnessed spikes in their 10-year yields. Impact on the dollar, the rise in the U.S. Treasury yields driven by strong economic data and hawkish Fed stance support a strengthening of the dollar. A resilient economy and higher interest rate expectations make the U.S. dollar more attractive for investors, right? So, So the dollar's gonna remain strong, right? Resilient economy, things are moving in favor of the dollar, and you got these yields continuing to rise, and we could start to see some interesting things happen and some concern jump in, but we'll see what happens as they get higher and higher, right? So that's there. Last night we had New Zealand interest rates, right? Reserve Bank of New Zealand maintained its official cash rate at 5.5 during the October meeting, extending the rate pause for the third straight meeting and matching market consensus. The board continued to judge that monetary conditions were restricting spending and reducing reducing cost pressures following a total of 525 basis point rate hike since October 2021. Simultaneously, the central bank viewed that inflation remained too high and the official cash rate needs to stay at a restrictive level for longer to return inflation to the goal range of 1 to 3%. By the second half of 2024, the committee reiterated there was near-term risk that activity and inflation would not slow as much as expected amid several risks, which include higher oil prices. In the medium term, weaker global demand, particularly for China, would likely weigh further on New Zealand's export reserves. So, so they held the rate, right? But they're still monitoring things, right? And this decision came as the Kiwi braces for election later this month, with the cost of living becoming a major campaign theme, right? So got some things to look out for there, some headwinds. So we'll see how those impact decisions going forward, but they held the rate, right? So we had some trade setups over the weekend that Benny broke down, and especially that Euro NZD pushing to the upside, right? And here's our catalyst for that push to the upside. So great things happening there. And Eurozone producer prices fall, most on record. Producer prices in the Euro area fell by 11.5% year on year in August, followed by a 7.6% decrease in the previous month, which was broadly in line with market expectations of 11.6% drop. This marked the steepest decline in producer prices on record, driven by tumbling costs for both energy and intermediate goods. Simultaneously, inflation slowed for capital goods, durable goods, and non-durable consumer goods. Excluding energy, producer price inflation decelerated to 1% year on year in August, down from 1.6% in July. On a monthly basis, producer prices rose 0.6%. Ending a seven-month period of decrease. So overall, right, producer prices are falling, right, primarily due to energy prices, but you're seeing a decrease there. Okay, so impacts of those high interest rates are starting to be felt. All right, then we have those are two major. And then let's talk about this yen. Japanese yen stabilized near 149 on Wednesday after an unexpected surge in previous session raised fears authorities could have intervened in the currency market to support the yen. The currency jumped as much as 1.7% to 147.3 late on Tuesday, before giving back most of its gains as stronger than expected U.S. data bolstered the view that the Federal Reserve will keep interest rates at restrictive levels for an extended period of time. Finance Minister Suzuki recently warned that he was watching currency moves cautiously. Last year, Bank of Japan intervened, and that was the first time since 1998 when the yen slumped to 145. The currency weakened sharply this year, and the Bank of Japan remained committed to its ultra-easy monetary policy, even as major central banks embark on aggressive tightening campaigns. So here's the deal with this, right? It's speculated that the Bank of Japan intervened. That's not the line that I wanted to raise fears that the authorities could have intervened, right? Bank of Japan isn't saying anything. They refuse comment, and they're just sitting and watching, keeping the mystery alive on whether they intervened or not, which could ultimately kind of help move the market back to the downside, which that move could have all been just speculation, right? There are some major investors that say the Bank of Japan did intervene. They're just not saying it. So at some point it'll come out if they did or not. But the Bank of Japan isn't saying that they did. They're saying that they're watching the market cautiously, and they'll continue to monitor, but they're keeping a tight lip on what transpired yesterday. But there was a major reaction to the yens. So here's the deal. If they did intervene temporarily or in somewhat of a smaller fashion, the moves could be just temporary, right? So we'll take a look at those and see what the market says. But if it's speculation, that means that there's capital flowing into the yen due to these high yield prices and some concerns starting to come into the market from a safe haven perspective, right? So there's two sides to that story that we'll have to continue to decipher information over the coming days and weeks to see what actually happened with the Japanese yen. So that's what we have there. And over to Forex Factory. See that rate statement there. Christine Lagarde spoke this morning. And basically what she said was she reiterated the Bank of England's, the ECB's stance, right? Restrictive for longer, right? She didn't really give a ton of detail based on the couple articles I did read, but she just reiterated the stance has not changed. Is her current theme and stance on things. So that is that's where she stands. So not a ton happening there. OPEC meetings kick off today. We have ADP non-farm employment change coming in. ISM services PMI at 10 o'clock. You see PMI data, purchasing managers index. For the euro came in. They came in mostly above expectation. Italian services came in almost right at, but those came in above. But then you had the final services PMI there, and your other services. I'm sorry, your final services PMI here coming in at expectation there. So. Yeah, so that's what we got for the day. We got Christine Lagarde coming back to the microphone again around 12 o'clock Eastern time. We'll see if she gives any additional insight. We also have crude oil inventories and Fed member Bowman coming to the microphone for the FOMC. Also, we'll see what insight he gives regarding the dollar as well. So that's where we stand from a fundamental perspective. Are there any questions from anybody? Or did you see anything that caught your eye that you want to bring to the table?
Yeah, I got a question. With them changing the Speaker of the House, is that going to affect us financially?
I don't know if there's going to be an immediate impact there. That's interesting. I have to read more on that. I didn't. I saw some things initially, and that was more geared around the debt ceiling negotiation, right? And his stance on that and what he came back to the table with. So I don't know if that'll have an immediate impact. I'll have to read more into that though to see if there's anything there. What it could impact is next month when they come back to negotiate this debt ceiling conversation again. There could be an impact there regarding if they make progress or not. So I think November will be where we could see some potential impacts if they get back to this last minute deal and they're not able to compromise. So I'll read more into that and I'll see if I find any other details though.
Okay, because I kind of, even though I had the news playing, but I couldn't hear it. It was playing, but it was something that I caught. It was something that he did that they didn't like, and I guess.
Yeah. So what he did was the deal, because they were down to the wire, and they told him basically if he brought a deal back to the table that was that required Democratic votes to pass it, they'd put him out. And the deal he brought back to the table needed a lot of Democratic votes to pass it. And it didn't meet all of the Republicans' criteria. So, and they didn't like that. But it was a deal that was necessary to get this thing passed. So, but they didn't like it. So basically he put his job in jeopardy to get this deal passed. And he was like, I'm going to do what's necessary as opposed to doing what the Republicans want me to do because we need to get this deal done. And he said he took the job to get things done, not just to give lip service. So if his job's in jeopardy, his job's in jeopardy. So that was his stance on it. So he did what he felt was necessary in order to allow the country to continue to function from a financial standpoint, and they didn't like it. So yeah, so that's what happened.
Okay.
From what I did read.
I mean, they took 12 days just to say, okay, you can have a job. So I don't know why they even put them in the first place.
Listen, that part of the conversation is interesting. I listened to it, but I do just that. I just hear what they're talking about. Yeah, I reserve my opinions on the whole Democrat-Republic conversation. So yeah, it's interesting to see. But like I said, I don't know if that will have a major impact on the currency markets per se. But down the line, if it impacts the debt ceiling negotiations, then we could see impacts overall, not just in the currency market, but period. If they don't come to an agreement to change things to allow the country to pay their bills. So it'll be interesting to see. It will be interesting to see for sure. Any other questions? Nope. All right, cool. Let's take a look at the dollar real quick. And we're seeing some retracement occur, right? Let's go back to the 4. We won't go all the way back to the daily today, but we had the shallow retracement. We didn't push into that 118, 127 zone, but we're pulling back some now, right? So we'll see how deep the retracement goes. And we'll see how the data continues to come out over the coming days as we lead up to non-farm payroll. It'll be interesting, especially with the narrative of restricted for longer. You would think the dollar is going to continue to push to the upside. However, we're seeing some retracements in the market now. So we could see the stock market push to the upside. And the bond yield piece could also start to give concerns to investors. So as the sell-off continues. So we'll see what happens here with the dollar. But right now we're starting to retrace a bit. So we're breaking back below this daily resistance level that was the B boundary, right? Pushed up and we're coming back down. So we'll see how deep this retracement comes. We may see this start to move even deeper here. So we'll watch throughout the day today to see what transpires. Yeah. So that's where we are on the DXY, right? We hit the 1 hour extension level. 786 retracement, boom, 127 level, and we're pulling back. So that new fib, when it pops in, it looks something like this here, boom, right? And that was on, I forget what, this was on the news yesterday, the Joe's job openings, right? That's where this big indecision candle came from, but also pushed to the D extension. So now we're seeing that retracement happen here, right? So we'll see if we come back down 618, 786 retracement levels, and then see if we get price to U-turn there. So we'll watch that from a lower time frame and a higher time frame perspective to see where we get on the DXY. All right. UJ. Just going to pop through some of these yens real quick, and then we'll take a look at the ones that you guys have on your radar. But UJ, 80-20 scenario. Boom. Right. It moved. Didn't get to the 382 still, but this is that long wick from potential intervention or potential speculation. It all came in line with that Joe's job openings report. So we didn't close below this daily level, and we didn't close bearish below that trend line. We pushed down and we pushed back up to the trend line, and now we're just hovering at that level, pressing sideways. So we'll continue to monitor to see where it goes. If the dollar retraces, we could see this continue to press to the downside. If it does not then we could see price continue to rise and push toward that 151,941 level. What we could also monitor and take a look at is if this recovers and presses higher, that could definitely be a smaller intervention by the Bank of Japan, right? Prices recovering from that move. And if it fully recovers and takes back all and then some, right? Smaller intervention by the Bank of Japan just to push the market down, and then a move back to the upside, right? And then if things get impulsive, we'll see them step in again and have a potential larger impact on the market if they deem necessary. So that's one of the things that I'm kind of looking at, is to see how the market responds, especially this dollar yen. And if we take back that full move, or if we do break the support level and continue pressing lower, then it could be more of a risk sentiment shift and concerns in the market overall if this doesn't recover all of that and start to press to the downside. So we'll continue to monitor to see, though. But that's the UJ. Benny, good morning, bro.
Good morning, Ryan. How are you?
I'm doing well, man. How about yourself, though?
Doing pretty good, man. On the road last minute.
Oh, man. Safe travels, dude.
Yeah. I appreciate it, man. So a lot of price action going on, though, eh?
Man, it's an interesting morning, dude. Interesting morning.
Man. Yeah, man. We got a bond sell-off going on because those rates keep going up. So you got investors trying to sell out of the less attractive bonds into, so they can position themselves to catch the higher rate. So it's going to be quite interesting to see what happens moving forward. But we always say October is crazy. The volatility really kicks back in. So I'm excited about it.
Yeah, for sure. Can you talk to us a little bit about that overall impact on the bonds and what that could look like or what it could mean as they're trying to get the higher rate?
Yeah, so it leads to, it's back in dollar strength, but you have to have some jockeying for position, right? If I'm in a bond, say I got a bond at 3.5%, a 10-year bond at 3.5%, now, I could get a better yield, right? Because the yields keep going up. So in order for me to sell out of that, I have to actually sell it for less, right? So there's a whole calculation and formula. Can't get into it on the call, but you have to. So that presses that the price is down, right, for a little bit because you've got a sell-off going on. So it's it could cause a slight correction, in the dollar while the jockeying is going on, but overall it supports dollar strength, and you've got yields creeping up on other bonds around the world globally too, so not only just out of global concerns, but the Fed is staying pretty hawkish. They've kept a pretty hawkish stance. You see everybody else is putting everything on pause, and some of them, they're coming across pretty dovish, in their tone. So yes, people are putting, in their last meetings, they're putting things on pause, but a lot of other central banks are coming through a lot more dovish than the Fed right now. So still dollar strength, but if you see a correction, that may be why.
Gotcha.
At least a slight one. A slight one.
A slight correction, yeah. So this makes sense then on because price hit the 1 hour D extension on the DXY, and it's pressing to the downside. So that makes sense. They're selling, moving out of dollars, but to then buy back. So that makes sense because we are seeing a slight correction in the market right now.
Yeah, and there's always a whole multitude of things that can cause a bond sell-off, depending on, what's going on globally in the economy. But this one is because of that yield is creeping up. That bond yield is up there. So I think it hit 4.8, 4.9 or something crazy.
4.885.
So just continue to look out for it.
Yeah. Okay.
Yeah. So you guys have to think about that, right? And so you see technically how you're getting that swing to the downside, with like your indices and things like that. That's why, right? So if you put your investment cap on, if I get 4.85% with the full weight, and faith in U.S. government bonds, I'm gonna allocate some money to that, right? And I'm going to get a decent return, whereas your stock market is a bit riskier, right? So I'm gonna put it over into what is deemed to be a safer asset to where I can still get a return. You know, so when you look at something like gold, if people say, well, gold is a safe haven, it is a safe haven, but you don't get a yield on it, right? So you don't get a yield on that. You can park your money there, but you're not getting a return on your investment. So you see people floating cash into bonds because the yield is creeping up, right? So they're trying to lock that in.
Got you. And said the secondary bond, the old bonds, low interest rate. Is that why the mortgage rates are high? No, the mortgage rates are high because those rates are increasing for the banks as well. So the banks still got to make their money. So as long as the rate continues to increase for the banks, mortgage rates are going to increase also, right? Because they got to make money on their money too. Yeah. Am I correct in that statement, Benny?
Right. So that interest rate set for the Fed is like the foundation, the base rate for everything, credit, mortgage rates, you know. Yeah. So you're definitely right.
Okay. Cool deal. Appreciate you, bro. Joy, I have to take a look to see if I can find that video that Benny did. We were talking about, and there's some other videos that we have to do. So that might be one that we have to redo as well. But I'll take a look to see if I can find that video. That breakdown of bonds. Cool deal, man. Anything else catch your eye? Fundamentally, I know you've been moving this morning.
No, that's just about it, right? Seeing that the bond yields went up. Of course, you've got, you know, we already talked about like the RBA and things like that holding rates. New Zealand did too.
Yep.
Right?
Yep.
So you see the impact of that. It kind of played right into some of the moves that we were looking at doing the weekly ritual. You know, so some of them were playing out nicely. It looks like that Euro USD is getting going on that correction to the upside. Almost looked like it was going to stop out, but it seems like it's trying to reverse now. So
it's trying to turn around. Yeah. For sure.
Okay.
Cool deal, bro. Appreciate you, man. All right, good people. If you guys have any pairs you want me to take a look at, drop those into the chat. We'll take a look at those right now, and then we'll dive into some of the pairs that we dropped into the Discord, see what those are, and any others that Euro dollar, that CAD Swiss, that Euro NZD. Pound Aussie. Pushing back to the upside, right? It came to these daily and weekly support levels, right? Strong push down, and we're getting a retracement right now. This is a strong move to the downside, right? Strong move to the downside. We're getting retracements happening now, pulling back. So we'll see what happens as we get higher here. What we could potentially be in for, right? We got this previous weekly support level at 193.961. We'll watch this level because could be in for head and shoulders. Boom. Right, you get retracement of any sort on this side here, right? Coming back, take back some of that back to that resistance level, which was support, right? We could see some action look like that there. So we'll watch that there, see if we get this head and shoulders pattern to play out here on Pound Aussie for more downside action, filling out this 80-20 scenario over the long term. So we'll watch that retracement there. So coming down to the 4, right, we hit our key level, right? We hit a 618 retracement in line with that support at 188.471, and we're pushing back to the upside. Okay, so if we run fibs off the high on 4, boom, just a retracement phase. We got a 382 initially, right? But we came into that support level. Now we're pulling back, right? Just as we're kind of looking for. So in this retracement phase, now we're just looking for a high price, right? We know overall the pound is relatively weak, right? Interest rates are still going to potentially be higher. You may not cut them, but they may continue to hold them as their data starts to shift. So what we could see here, right, is this retracement come, give us a high price, 618 retracement on the 4, 786 retracement, and then look for price to pull back and move back down to the downside, giving us that head and shoulders action there within this consolidation on the 4-hour time frame. So That's really what I'm looking for. I'm looking for a high price here to potentially get back short. That still have to be a catalyst of some sort, giving us some strength in the Aussie, seeing as they did hold their interest rates as well. But we'll see what happens as price continues to rise here. Right. So that's what we're seeing is just this retracement phase here. And we'll watch and see what happens at 193.961. Coming down to the 1 hour. Right. We broke back above. We broke back above the cloud, pressing to the upside, and we got an 80-20 scenario. We didn't get to the 382 there. Pushed down, didn't hit that D extension, just barely missed it. Boom, reversal. Right. So all it is an 80-20 scenario on the 1 hour time frame playing out beautifully, pushing back to the upside. So we'll see again what happens at these higher levels, 618 retracement zones. And then look for potential opportunities to get back short. Right. So there we are on an 80-20 scenario. I missed this one. I don't know if anybody was able to take advantage of that move there. What is that? What day was that?
Yeah, I got long on this one.
You got long on it? Okay.
Yeah, because technically it was setting up, and then you got a slight interest rate differential. You know what I mean?
Yeah.
In regards to them holding, pound raising, so.
Yeah. Okay, sweet. Looks like we have some people take advantage of that too. Good job. Great work. So yeah, that's a beautiful move to the upside. We got some more movement to go. So off that low, right, we're looking at 300 pips already. We get back to that 618 retracement level. That's 480 pips. Get all the way back to that resistance, 520 pips. So it's a beautiful move back to the upside. And we know we had like a 900-ish pip move to the downside, right? Taking back some of that. And then it could give us a high price to get back short to take advantage of another move to the downside. So we'll watch that and see how things move from there. But that's where we're in, right? 300 pips to the upside. Look for some more continuation there. And then we'll watch as we get to these higher levels. Questions on the pound Aussie? It's a beautiful move.
Nope, no questions.
No.
Nice setup.
It was. Cool deal. Let's see. While we're on the pounds, we'll take a look at the pound dollar, pound CAD, and then we'll hop over, take a look at gold and the NASDAQ. So, pound CAD. On the daily time frame, right, in this retracement phase, strong move to the downside. Boom. Now we're getting some retracement here. We got oil pulling back. Excuse me. So getting a little bullish on some of the pounds, but all within the wave sequence, right? We know that we got to get a retracement at some time. And this was as straight down as you can get. So prices move straight down to the downside. Now we're just getting a retracement. So we'll watch and see as the market takes back some of this move. Again, see if we get a high price and then get back short. I definitely see the Canadian dollar gaining strength. I don't see it staying down. I don't see oil retreating for an extended period of time, but we could see retracement, high price, and then get back short on this one. So we'll watch that and see how things move there. Coming down to the 4, right? This was an 80-20 scenario that I missed. I had it marked up and everything and didn't pull the trigger on it. But here's your 80-20 scenario there. Shallow retracement, 118 to 127 zone. Push deeper into the zone. Just missed that D extension. Got the flip. Boom. Move to the upside. Right off the low. Right now we're at 249 pips. We get back to the 618 retracement level. It's 319 pips to the upside. So again, 80-20 scenario playing out beautifully to the upside. Not sure if anybody was able to take advantage of this one, but there's the move there. Right, so that's what we're seeing there is a retracement of this longer move to the downside, and we're looking for a high price to get back short. All right, so that's on the 4, and then coming down to the 1, similar look, similar scenario. Boom. Right, I have the cloud on there, and I dropped some trend lines because we started to get a little sketchy here. Right, so this trend line would have been adjusted to the lowest point. Like so, boom, right? And there's your trend line break. and then you get long. Right, so we're running to the upside there. We're at TP1 on the 1 hour, looking for price to get to TP2, potentially 786, 86 retracement levels. And then we'll look to see what happens, right, as we retest some of these support levels and look for opportunity to get back short there. All right, so 80-20 on the 4 and 80-20 on the 1, moving to the upside there on this pound CAD. So if you're not in this, be patient. Let's get a high price and see if we get an opportunity to get back short once we get higher in the zone here on the 1 hour and on the 4 hour. All right, but beautiful move there. Another beautiful move, another pound pair in a retracement phase, right? We see it moving to the upside. Questions on the pound CAD?
Hey, Ryan.
Sir.
I just wanted to remind everybody, because these run, right? And sometimes people taking a TP1 and then you look back like, wow, that one kept running at TP2, TP3, kept going. Just a reminder that they can always split their risk up too, you know?
Yeah.
And you know, so if you're in a trade, if you're taking a trade and your risk says, hey, I can trade this at, 6 micros or 60 cents, split up at 2 trades on entry. Let one run and take profit 1, let the other one try to run and take profit 2. So when your first order hits take profit 1, move your second order to break even and see if you can get a TP2 or move it into profit. If you're having a hard time and you're struggling psychologically with trying to let these trades run. So just wanted to remind people that they can do that.
That's a good call. Yeah, appreciate that, bro. Right. So split your order up into 2 orders. So if you're risking, let's say after you do your math, your lot size is 2 micros, right? So you do 2 1 micro orders, boom, boom, right? And you allow 1 to get to TP1, take profit there, and then you set your second one with a TP of TP2, and allow that one to run, moving your stop loss into profit as price moves in your favor, right? Now you move your stop loss into profit, you got price running to the upside on the second order, right? So definitely a way to manage the trade there, to allow you to have a runner moving in that same direction, to capture that full move as price gets there, and to be able to capture some additional profit there. So questions on that statement, anybody? Does that make sense what Benny said? Welcome. All right, cool deal. So that's the pound CAD. Quick peek at the pound dollar. So pound dollar daily time frame, similar deal, right? Just shy at 382 on the daily time frame. Strong move to the downside. We came into the support level, and we're getting a retracement, right? Getting a retracement there, right? And we're looking for a price to get to this level and then bounce, right? So we're getting a retracement here. We'll see what happens on the retracement, see how deep it comes. But a retracement nonetheless, right? Strong bullish push there. We'll see what happens as we get back to this evening star pattern here that we saw. Just a retracement, and then price move back down to the downside potentially. So as we come down to the 4, right, we're looking at this one. We saw price, right, shallow retracement. It was running to the downside. We said we want to see price get to that support level, right? Didn't quite tap it, came just short, but we're pressing back to the upside now, right? So here's that retracement. We'll see how deep that comes and see as price gets into these higher levels, 618, 786 level, maybe even coming back to 125, 467. But a retracement right here nonetheless, and we'll look for a high price to then get back short, right? Benny talked about the dollar and how we could see some retracements as the bond sell-off happens, and then buying back bonds at a higher yield. So that could definitely be the catalyst here in this retracement. So we'll watch price as it gets higher into the zone to see if we get things to slow down and price to settle in somewhere in here, and gives us an opportunity and some confirmation to get back short in line with the dollar bullishness to the downside, right? So we'll watch that there as price pushes into this range here. Okay, coming down to the 1. There's your move there, right? We already got a 382 push, but we're getting a retracement here. We'll see if we get a little bit deeper in the zone. Here on the 1, we might not get this high, but we could, right? We could also potentially come into the 78686 retracement level, right, where we had previous consolidation that we broke out of to the downside. So we'll watch this and see how deep that retracement on the dollar goes. And that could give us some insight on how deep this retracement comes before we get a high price to get back short, right? So we're just in this retracement phase here. First AB boundary on the on the 4-hour, right? Any questions on the pound dollar? Just watching that retracement. I'm going to be watching this off the 4-hour time frame, looking for a high price here. Okay. Nope. All right, sweet. Let's hop over, take a look at gold and some indices. NASDAQ. So let's look. This was my, looks sloppy, but price kind of sort of did what we were looking for. Retracement, took out the A, but came back down to the downside there. So let's clean this up. We'll bounce back. Daily time frame. And we'll see what we got here. Right, so daily time frame, AB boundary. Right, we're still inside of that zone. Right, stalling at this daily support level, 14,557. Right. We'll see if we're able to close below that or not. This is going to be interesting to watch. That level held there. It held there a second time. We weren't able to close below. Strong bearish move. Still didn't close below, and we're getting another reaction back to the upside there. So gonna watch this to see what happens, to see if we just get a retracement and a continuation down and break the support level, or if we continue to rise here. This level is going to be key for us going forward. So as we come down to the 4, right, there's the AB boundary on the 4, right? Beautiful 80-20 scenario to the downside, price continue pushing. So we're watching this at this 8.6 retracement level, right? See if we get a double bottom and a push higher, excuse me, and maybe a deeper retracement on the dollar. As the indices rise, we'll see the dollar push to the downside. Or, right, do we just see a pullback and a retest of this previous 4-hour support level here, and serve as resistance, right? And then see price push back down to the downside, right? So if then statements, if price stays below that 4-hour level, right, we'll look for price to continue to move to the downside. If price breaks above that level, then we'll look for potentially continue move to the next level and potentially higher. All right, so we'll watch that to see how things transpire here at the support level 14,557. Right, so now coming down to the 1. Let's move this out. Right, so that fib got taken out to the downside there. We'll run fibs off the high, and then again, and then one more time. Boom. All right, so we zoom in here in our consolidation. Didn't quite get to that 118 level, but we got to push down, and now we're in this retracement phase. That 4-hour support level comes in line at a 50% retracement, right? So we'll watch to see what happens at that level, 14,707, right? But we're in a retracement phase right now, nonetheless. So we'll watch this to see as price gets higher, retesting bearish action that occurred, right? We'll see if we get a response here at this 14,707 level for a move back down to the downside. Okay, so we'll watch that closely there to see how things transpire. Okay, as we come down to the 30-minute, Reese's sweet spot here. Boom. Run the fib off the high. And there's where you had your 80-20 scenario. Boom. Shallow retracement, 118, 127 zone. Move to the upside. So again, folks that trade the indices, right? No matter the time frame, no matter the asset class, this scenario happens time and time and time again, right? So again, we'll watch this, right? This on this 30-minute, that 4-hour support comes in line with the 382, 50% on the 1 hour, right? So we'll watch this level to see if we get a reaction here, right? And a move back down to the downside from there. Okay, so that's the level that I got my eyes on. See if we get a high price on a higher time frame, a 1 hour time frame, and then get back short on this one. And then we'll also see what happens with the dollar and see if those correlate in an inverse fashion. So that's what I'm looking at there. Retracement to continue to 14,707. Questions on the NASDAQ? Reese, you seeing anything different here, man? No questions from Joy. All right, cool deal. Gold. Same thing. Long from the low. Sweet. Good work. Good work, man. Gold. Back to the daily. Look at that. Look at that. Still inside this capital fib AB boundary here. Still inside the capital fib AB boundary. Pressing the support level, right? We broke through these previous levels. We can take those out. Support, boom. Broke down. Okay. So now let's see if this level holds or if we continue to press down to the downside. Strong move down. So we could be in for at least, and we'll see what the lower time frame says, retracement, right? A retest previous support levels, right? And then maybe continue pressing lower, right? So we'll watch that to see what happens there. But potential retracement opportunity, strong move down, strong impulsive move down, retracement, and then we'll watch to see what happens. So coming down to the 4, right? Is that correct? Let's see. Just going to double check these fibs here to the upside. Just to make sure we're in alignment. Yep. All right, cool. So we're running them down. Joy's long at 18.25. Let's see, Joy. Let's see what it says. Boom. There's our capital fib there. We'll take these smaller waves out. Look at those on a 1 hour time frame and 30-minute time frame. Whoops. Boom. Oh, that is the fib. My bad. All right. So let's see. That's our active AB boundary there. Just pressing sideways, 18.25. So Joy is right in line where price currently is now. Came down, touched that support level, right? We had a shallow retracement push down to the extension, didn't get the deeper move. So now let's see if we get a pullback here, right? Let's see if we get a pullback here on the 4 hour. We'll see what the 1 hour says as well. But fresh AB boundary, just shy of that support level, just shy of the A boundary on the daily time frame. So let's watch that to see how things move there. Coming down to the 1, run the fibs off the high again. Like so, and boom. So here, right, you see just more details on a sideways push. Okay, so we'll watch and see, try to give us a double bottom here and now we're trying to push back to the upside. So we'll see if we get a nice retracement here, at least coming back to a high price, and we'll see what happens. What happens there? We could potentially come back to 1858, right? Support level that we broke through that we haven't retested yet. So we'll watch and see how deep that goes. And then this is that higher previous support level there that we'll see from a higher time frame. If price moves that far, that'll call for potentially deeper retracement on the dollar. And so we'll watch and see, right? But at least we know we're in a retracement phase right now. Once we take out that A boundary, then we'll flip the fib to the upside and see what opportunities we have there. But retracement on gold right now, just a matter of how deep that retracement goes. Okay. Questions on gold? No doubt. No doubt. You seeing the same thing, Reese? That 4 hour AB boundary. Cool. Let's take a look. I know you like to trade these 30-minute deals. Boom. Oh wow. We did wick that D extension there. So that's what the move looks like there. That's your fresh AB boundary on the 30-minute, right? Just in that consolidation, look for a move back to the upside. So we'll watch that there. And you can probably even start running your fibs to the upside on the 30. Nope, not yet. Need some more action here. Boom. There's a smaller wave there to the upside. So once things get going, then you might have an opportunity to move on that AB boundary to the upside. Okay. All right, no questions on gold. Cool deal. What else do we have here? Euro dollar and euro pound. Dollar, yen, and Bitcoin. Yeah, I've been taking a look at Bitcoin in a minute. Let's see what it's doing. Let's see what it's doing. Yeah, I'm with that, Reese. So look, this is a longer term. This is funny. Long term, right? We had this crown pattern playing out to the downside. Still hasn't gotten to the D extension off the harmonic fib. We'll see what happens over time. But we're just consolidating right now, right? There's your D extension on that harmonic fib. Still got some move to the downside. We'll see if we get to this $10,000 range. Selfishly, I definitely would love for that to happen. So we'll see how things transpire here. But we're in a retracement phase right now. So if we remove this harmonic fib and just run fibs to the downside like so, this is what you got, right? So you're just in the 80-20 phase off your smart fibs to the downside, right? And we're stalling at the B boundary 236 retracement zone. So if we break above 31,920, right, we'll get to that 382 50% range and another resistance level at 40,000, right? We'll see what happens, see if we get there. But we may not, right? So we're in this consolidation right here. So we'll watch these levels to see what happens. But we got that resistance level there, and we're sitting at a resistance level right now at 28,210. All right, so there's your move to the upside in that retracement. So let's pull these out. Maybe, there we go. And let's drop to the 4. Got potential head and shoulders pattern happening here in this consolidation, but we'll talk about that in a second. I want to run fibs off the low, see where they sit. This is going to come back too. So there. All right, and here, boom, there we go. Wow, so not able to break out to the upside, not able to break out to the downside. So consolidation on the 4 hour as well. This is a head and shoulders pattern that could potentially play out on this one. Right. Not extremely high on the right shoulder, but we could see this play out to the downside here. So we'll look at things on a lower time frame to see what that looks like as well. But there's a potential head and shoulders pattern there within the consolidation that we have pushing to the downside. If we run a fib on that, boom, that puts us back at 20,000 range, and that's support at 19,265. So call for us to break that 24,703 level. So we'll watch to see, right? If we get this move to the downside, boom, right? We'll see price break those levels and continue moving down. So we'll watch that part closely there. And take that out. Let's come down to the 1 and look at this last move to the upside here. Last impulsive move, AB boundary, boom. 80-20 scenario. All right, 80-20 scenario. Shallow retracement, 118 and 127 zone, price pushed down to the 382. All right, so we'll continue to watch this to see what happens. Strong move to the downside. So let's see if we get a retracement and a potential continuation lower. All right, so look for this. Let's see if we get this type of action here. To get us back down in the sweet spot here and then see what happens there, right? But it was a beautiful scenario here, right? I don't trade Bitcoin, but shallow retracement 118, 127, 80-20 all day long, right? So beautiful move. So we'll watch and see what happens there. See if you get sub-fib deep retracement, continuation to the downside. Okay, as long as we stay below 28.10, I'll be looking for price to continue to move down there. If we break above 28.10, then we could be headed to this next level at 31,920. Okay. Questions on Bitcoin? Reese, man, listen. We're on the same wavelength there, man. It's Benny and I talk about all the time. It's on a whole nother level, man. So we yeah. It's a beautiful thing. In this group, we're on to something. Joe, you funny, man. Yeah, people. Once you find something that works, people will definitely take what works, right? They'll definitely take what works. So, it's a beautiful thing, man. It's a beautiful thing. So, hopefully you guys understand, and those that have been with us a while, you're really starting to see the value in what we do, right? And the value in why we teach things the way that we do. It may not make sense at first because it sounds like gibberish and it's new and it's completely different than what anybody's ever talked about. It's a different way of understanding money, different way of understanding how the market works. And it's uncomfortable because it's pushing you outside your comfort zone because it's different than most people tell you how to trade, right? It's different. So when things are different, when you come into a space where tons of marketing hype behind, get rich quick, do this on 1 minute, 5 minute time frames, and we're saying no, look at it from a top down perspective, look at it from a longer term perspective, and this is how the market moves. It moves in these waves, and you can track the waves this way. You're like, what? Right? But once you take the time to actually learn the skill, once you take the time to really dig in and learn yourself, right? To start to develop the discipline, start to create new habits, to be open, expand your awareness to look at things from a different perspective, the world changes. The world changes. But you got to be open to doing so. So those that are still going through the training, continue to dig in. Continue to dig in, because the hard work at the beginning is worth it on the other side. It's hard at first. You got to get outside of yourself, right? You got to get outside of yourself. When Benny and I first met and he broke all this down to me, I was like, what? But it's why I would remark my charts every day, because I had to shift my thought process, right? I had to completely change how I was brought into the market and how I saw things, so that I could really, really put these things into action. And like Benny says, once you see it, you can't unsee it, right? Once you see it, you can't unsee it. Then it's all about really instilling the discipline, because you see it now. Now you got to force yourself to manage your emotions, understand your emotions, so that you can sit in these moves and allow the market to move how it moves, and understand the anxiety that comes with it better. So you're not jumping in and out. You're not dibbling and dabbling, right? You have a one way to look at the market that doesn't change, right? And once you develop the consistency, once you develop the discipline, it's a whole nother level. It's a whole nother level, right? So the work is worth it on the other side. I promise you. I promise you, right? I'm not going to promise you going to get rich quick. I'm not going to promise you that this is going to be an overnight thing. I'm not going to promise you this is going to be easy, but I will promise you is, if you're willing to put in the work, the time, the effort, the energy into learning the skill and into learning yourself, you will see progress. That's what I can promise you. That's what's guaranteed. That's what's guaranteed. And the more you do it, the better you become. It's worth it, man. It's worth it. So, yeah. Didn't get through everything. I'll take a look at this euro dollar real quick, and that's where we will wrap things up. We looked at that UJ already. Euro dollar. Press down, right? We broke the weekly support, came down to the daily support levels, right? Still in that 618 retracement phase there, but push deeper, okay? Now we're trying to turn over and push back to the upside to get that retracement that we're looking for on the lower time frames, right? So, retracement here. We'll see what happens there, right? So coming down to the 4, here's our 80-20 scenario. Boom. Shallow retracement, 118 to 127 zone. Just missed that D extension, came to that daily support level. Now we're turning over, pushing back to the upside, right? So now it's just a matter of, do we get this deep retracement to come? Price is turning over, trying to get long for us, right? So looking for this retracement to come at least back to that 382 level at 107.510. Coming down to the 1. There's your move on the 1. You got a 382 push down, and now we're coming back to the upside. All right, trying to break back above this previous weekly level, give us a retest and continuation moving to the upside. Okay, so that's what we're looking for there on the euro dollar. Right, but we're tracking this off the 4-hour 80-20 scenario here. Boom. Questions on the euro dollar. 80-20 play. Making it happen. Nope. Remember to master the skill set. That's the mindset, man. No matter what. All right. No matter the time frame, right? Just like the methodology, right? Just like the methodology in the charts, life is the same way. It doesn't matter the time frame, right? Over time, if you stay consistent, things will work out in your favor. You got to stay consistent. It's really hard at first. I'm working on myself. Can't wait for the transformation and the bankroll. Yes, ma'am. Joy, can't wait till Thursday to redo my charts. Let's go. Joy about to get comfortable. I love it.
Listen, let me tell you something. I feel like Tyrone Bigum's on the chart. It was like, I'm supposed to be unpacking, and my husband like, what are you doing? Why you got the iPad in your hand?
Just give me a minute.
I'll try.
I dig it, man. Staying connected. I love it. But you put in the work, and you also deserve some time to get things in order for yourself and your family. So kudos to you in the work that you've been doing. Kudos to you in your growth. Kudos to you in your new house, right? Exciting things to come. So we appreciate you, but we also celebrate you as well on this big move for you and your family. All right. So anything before we wrap it up, good people? No. Ben, you still on with us?
I am, man. Great session as always. If I was just started out in this group, I would go through the training. I would learn how to mark my support and resistance, depending on what smart trader package you have. If you have the whole smart scanning thing, I would scan my fibs, and I would look for 80/20s. As I get better, and understanding, the fundamentals and trend direction, and really mastering those C to D moves, then I would do that. But if I was just starting out, that's what I would do. Learn how to do my top-down analysis with my support and resistance levels, drop my fibs, and look for 80/20s. And then decide how you want to enter. Do you just want to trade it in the zone, with buy limits, sell limits, or whatnot? Or, do I want to play additional confirmation, so I can tighten my stop loss down and things like that? But I would keep it as simple as possible. That's what we do in this group. It's very simple. The market moves in waves. If you know your ABCDs, if you can count, you can trade with us. And then the rest comes down to risk management and trade management. I don't know anything else out there that's doing it like this, or anybody. I mean, these are monster moves. These are 100, 200 pip moves that we're finding on a regular basis. Not once a month, not twice a year, like on a regular basis. So think about that. I beg you to do the research to find another place besides the pro that we trained to do it. That's it. That's all I got, man. Great job, everybody.
Appreciate you, bro. Yeah, Reese, psychology is major, man. Psychology is major. That work on self. Like Ben said, these are moves we find all the time, right? Pound Aussie, 1,000 pips. Euro Aussie, 900 pips, right? All within the same month. Consistency over a period of time. 80/20 will continue to stand. So, good people, have a phenomenal Wednesday. Find your 1% today. Let's get to it. Let's make it an awesome day. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Benny Allen. You guys have a phenomenal one. Peace.